Hey, welcome back to Just Vetting, where we go beyond the transaction to explore what it really takes to build, buy, grow, and transition a successful veterinary practice. Today's guest is not only one of the most respected lenders in the veterinary industry, he's also a longtime friend and someone I've had the privilege of working alongside on countless transactions over the years. While attorneys, I think, receive much of the attention during a transaction, I always say none of the deals will happen without the right financing partner. And Bert Hockenberry has spent more than 2 decades helping veterinarians become practice owners, financing everything from startups and acquisitions to practice expansions in commercial real estate. Today, we're going to go behind the scenes to discuss what lenders really look for, how veterinarians can prepare themselves for ownership, and why the best financial decisions begin long before someone submits a loan application. Bert, welcome to Just Vetting.
Pete, thanks for having me.
So, Bert, before we really get into it, I heard your personal story a while back. Just tell us a little bit about your family. Your daily life outside of the business world. Tell people what you're in charge of, what you're overseeing at your house, in terms of your animals and things like that. Yeah. I mean, a guy from Jersey, I was like, oh boy, he's busy just doing that.
Yeah, this is like managing a national division probably isn't as hard sometimes as it is managing this household. We have 2 teenage daughters, right? The first one just finished up her freshman year at South Carolina. Our youngest daughter just finished her junior year of high school. So, I don't know, Pete, 15 months or so, maybe less from being empty nesters. We have 2 French bulldogs. We have a bunny that lives in my wife's office. We have 3 horses, one of which is a micro mini. So it's a horse that's basically the size of, I don't know, like a golden retriever, maybe. So not only am I working in the veterinary space, but I'm also doing my darn best to, keep this industry alive with all the money that I'm putting into it myself.
Yeah, I think, it's hard enough. I think a lot of us have, a dog or a cat at home, and the horses that you have too, on top of everything else with your family. I was like, wow, it just, where do you find the time? But I mean, you get passionate. Yeah, it's cool. It's a lot. It's a lot. So you've been in finance and banking for over 20 years. I guess how did you find your way into veterinary finance specifically?
Yeah, so I actually started off in the healthcare financing arena, doing inside sales support for some dental regional managers that were in outside sales, and did that for about a year or so. In the midst of that, also entertained and was able to work some transactions with veterinarians, and just kind of took a liking to working with vets. So a year into doing that, I actually took an opportunity as an outside salesperson managing a region that was veterinary exclusive. So really for the past, I've been in the healthcare financing space for, you said it, about 2 decades. The last 18 years of that has been working exclusively with veterinarians.
And in terms of veterinary professionals, how do you see, when you compare them to other professionals outside veterinary industry, how do you see what's different about them as business owners, from your perspective?
Yeah, it's so obviously, love working with veterinarians because they're so passionate about what they do, right? And I think all of us are in this business to some degree because of our love for animals. Right. They from an education standpoint, right? There's so much focus put on the production part of the business that it feels like, maybe the business side is left out of it through the schooling. Now, I feel like that has improved over the years with some of the associations and networking opportunities that are out there, a lot more awareness created, right? But they are generally speaking, very, very easy to work with, looking for help, looking for direction, because as good as they are working with animals, this whole financing aspect seems extraordinarily different and, a little uncomfortable to some at times.
Yeah, and it's a great analogy, and you express that, and I say almost the same thing to them to try to put our clients at ease, because whenever I first have a call or a meeting with them, they're so apologetic. Oh, I don't know this or I don't know that. And I say, Doc, it's okay. If I bring my dog to your practice, I don't know what's going on with him. I want your job is to explain it, give me options, and then I'm going to make the decision as the owner. And that's our job as lawyers, your job as the lender. Explain what the options are, and then they make the decision at the client at the end of the day. I try to kind of put them at ease in that way. And then you do have the ones that obviously have more experience or education because of all the opportunities that are out there for them, which I hear a lot from the older veterinarians, Bert. In terms of years ago, it's changed a lot. To your point,
Yes.
There's a lot more opportunities out for I guess, younger veterinarians or mid-career veterinarians to get information and really get educated from the business aspect of things.
Yeah, there wasn't a lot of this, right? Like there
Yeah.
wasn't a lot of this. I mean, even probably 6, 8, 10 years ago. So I think there's a lot of passionate people involved in this business that, to your point, adds a lot of value to these doctors that are very good at what they do, that are going through what we do for the very
Right.
first time, right?
Right. Let me ask you something about the big white elephant in the room in terms of how has corporate consolidation influenced financing? I mean, we all talk about it. It's all impacted all the professionals and the practices in one way or the other. Where are you seeing it from where you sit?
Yeah,
That impact.
it's enormous, right? And quite honestly, I think still today, it kind of changes the composition of what we see as far as financing opportunities. So I think if you go way back to the inception of all this, corporate started to get more heavily involved, and once that snowball rolled downhill and really got big, at that point you started to see some of the behavior changing in this business. So, whereas a lender, we used to be very, very heavily acquisition oriented. Some of those opportunities would dry up because they're being taken up by corporates. And, and then veterinarians are getting locked into contracts where you would see the first time owner stuff slow down a little bit. And we're seeing a lot more, of an opportunity with established practices doing growth projects, right?
Right.
And then
Right.
I think, as time goes on and doctors age out of some of those contracts, they then have gone through, a really important experience where they've gotten a lot of opportunity, they've produced a lot, they've seen how these hospitals run, and I think in a lot of occurrences, it's given them the confidence to want to go start their own thing, right? So we went from the slowdown in the acquisition business to a huge uptick in the startup business,
Yeah.
and then as corporates have slowed down a little bit, maybe, or the multiples at least have come down a little bit. Now you're seeing more activity again in private acquisitions, right? Along with, a pretty substantial amount of these doctors that have opened new hospitals, maybe in a lease space over the past 5, 7 years, that are now interested in a growth project. So the business has always been there. It's just constantly changing. But to your
Yeah.
initial question, I think so much of that is just based on, the effect that corporates have had in the space.
Right. Yeah, I always use, and I'm like a broken record, I use the word pendulum. And I kind of look back at January of 2023, at least from my view in our practice, where, before that time, 22, 21, 20, we were doing slew of corporate sales, always still involved with startups and growth projects, acquisitions. But big focus for, I think, a lot of transactional attorneys was, just managing all the corporate sales that were going on. But then, come January 2023, to your point, it's changed with the multiples, and a lot of them put the brakes on it. It's the pendulum has shifted, and to the so much more in the independent side where we're doing a lot more startups, those growth projects and acquisitions, a lot of associate buy-ins, because those multiples maybe have contracted a bit, which I love doing because there's a lot more personal interactions you're having with the clients, and and I love working with somebody from like the startup, to wherever they're going to end up going at some point in time, bringing on a partner. But it has changed, and it's really interesting where it ends up at some point in time.
It is funny too, man. Like something you just said, right? Like, I one of the positives of having done something for 20 years is just like some of the stories that you've seen and been a part of, right, through that time span, and remember vividly conversations with veterinarians that were worried about getting financed, and now they're selling their hospitals for tens and 20 of millions of dollars, right?
Yeah.
And some of this stuff happened within 10 years, and 10 years later we're still doing this. So it's really, really been a cool industry. Some of the stories are amazing. But that interaction, I think, is what makes it fun.
I completely agree. The interaction is definitely what keeps you going every day, and it's so diverse in terms of depending on what you're working on. Looking at the industry, like the finance industry as a whole, interest rates. Should buyers worry about today's interest rates in your mind?
Yeah, it depends on the situation, right? I think most of what we do is first-time practice owner stuff. So in that vein, I think the most important thing there is opportunity, right? Listen, if we just talked about corporate, and people are looking in the rear view mirror saying, man, I wish we had the multiples that we had 3 years ago, right?
Right.
I think people say the same thing about interest rates. Interest rates are still incredibly good, relatively speaking, right? They are lower than your standard home mortgage rates right now. And for the opportunity it's out there, it's a very, very small piece of the pie, right? The value that you gain by being an owner of your own business so far outkicks any concerns around interest rates or anything like that. So I have always been a big proponent of an interest rate is not a reason to wait. You don't want to miss on opportunity because you're waiting to save a little bit more money, right? You can always refinance and save that money down the line, but go capitalize on an opportunity and grow your wealth.
Yeah, it's a great answer. When somebody calls like, "Oh, what rate are they charging?" I said that should be the last question you're asking. Yes, it's important, but there's so many other things that you should be asking about. And at that point, what's the biggest misconception that you see with veterinarians when it comes to borrowing money, if you see any?
Yeah. So, right, this goes back to probably early career stuff, but I think the biggest concern from veterinarians is just coming out of veterinary school with, generally speaking, a very large amount of debt, right?
Yes.
School obviously is costly. You're looking sometimes at plus minus $250,000 in student loans. And I think there is some apprehension or some concern by young veterinarians that, I've got all this money sitting out there and I'm not going to be able to own until I pay some of that down, which, while completely understandable, is not the case, right? And if you're working with a specialty lender and someone that lives in this space, we understand that that's a ticket to the game, right? So you're going to have housing payment, you're going to have a car payment, you're going to have student loan payments, right? That's part and parcel with what we do. I think a lot of veterinarians are kind of sheepish or concerned because of that aspect, which is largely, I should say, a non-concern for banks, right?
So are you trying to appeal? So you have a young veterinarian that's coming to you. They got significant amount of student loan debt. What's the advice that you're giving to them? First of all, I guess the first thing you're saying, this can be done, and then you're explaining to them how it can be done.
Yeah, and that's a great question. If you have your eyes on practice ownership, right? If you have an entrepreneurial bone in your body and this is what you want to do, I think if I can stereotype, veterinarians, based on my 20 years of experience doing this, largely they are very good with their money as far as I make X number of dollars, I'm going to put Y against my debt every month. And they get in this mindset of get out of college, pay down my debt, right? And then we can do whatever we're going to do. I would tell you, if you have the intention of owning a practice, saving is such a big aspect of it, right? And you talked about interest rates, Pete. It's a larger conversation, but if you are able to square away some money every month to build your personal wealth, you're not going to need to invest that money into your financing, but that wealth in your financial profile is absolutely going to get you the best of what's out there when you're, entertaining financing partners. So people are geared up to pay down debt, but coming out of veterinary school, not always the best decision if you have your eye on practice ownership.
Right. So, somebody like yourself and your team, you guys want to get in front of young veterinarians really early on. I'd say it sounds like even in school you want to be having those conversations with them, especially for those who do have an entrepreneurial desire to own a practice at some point in time.
Yep.
Yeah.
So a lot of that conversation is, and we do, right, speak to, second, third, fourth years going through veterinary school. A lot of that conversation is just about creating good financial habits. It's okay that you're going to have a housing payment. It's okay that you're going to have all these student loans, but how do you manage your discretionary debt or your credit cards, right? Are you staying away from, the negative debt, so to speak? And are you able now, when you might only have $1,000, $500 a month at your disposal, are you able to section some of that off and put it away? So when you're making more money, you can do that on a bigger scale and drive you more quickly to where you want to go from a, ownership and financing perspective.
And having those good financial habits obviously going to drive a better credit score, which is, I guess, another part of the overall piece of the puzzle that you're looking at as well.
Yes. Yeah. And a very, very small concern, again, with veterinarians. Generally, banks are looking for generally in the 700 plus range. Not a lot of times where we're not seeing credit scores in that range, right? So like if you're not running up credit cards, if you're paying things on time, if you're managing your debt the right way, that is going to be an absolute, non-factor in you going through any kind of financing process, because just by your habits, to your point, you're going to be exactly where you need to be.
Now, you alluded to before about ownership still being the best path to long-term wealth. Can you just expand upon why you feel that that's the case just a little bit?
Yeah. It spoke, to young veterinarians years and years back, and, kind of pulling everything together that we're just talking about. This first year vet, at the end of the presentation was like, hey, question, can I afford to own a practice? And my answer was, can you afford to not own a practice? And right, like you're building personal wealth, right? It's the analogy of renting a home versus buying a home, right? Like you're growing a business, you're building equity in that business, right? Like that becomes, and if we take this, we started talking about corporations, and multiples are varying these days, but you're going to sell your hospital for 5, 10 times, plus what your bottom line is. As you continue to grow that bottom line and you continue to refine and streamline every year, your hospital continues to grow and grow and grow. So much value in doing that, and really, wealth that becomes generational has arisen from some of these opportunities.
Yeah. And we're not even talking, that's the practice. And as you know, a lot of most of our clients, they're buying the real. You guys are talking to them about the real estate too, where there's an opportunity. Can you talk to me a little bit about that too?
Yep. Yeah. In exact right. Same thing. Right. You have the ability to acquire the real estate. You're paying rent to yourself. Right. So you're creating financial advantage there. And again, a facility that over time you're building equity in goes into that that net picture of, having your eye on the future when you start. And so if you're building equity in the hospital entity, you're building equity in the real estate entity, just going to improve your financial position along the way. And also, give you an option if and when you get to that point when you are going to sell, you may want to hold on to the real estate as an investment, right? It may be free and
Right.
clear. You may owe very little on it, but now that becomes basically an annuity that continues to pay you each month, even after you've cashed out and sold your hospital.
What do you advise your clients? What's your team advise your clients when again that's the same, I guess, hesitancy. Hey, Bert, I think about buying this practice. Real estate. The owners sell the real estate. He doesn't care one way or the other. I don't think I can afford it. Like, what do you tell them? So you're telling them why they can afford the practice. What are you guys looking at as a whole when you're looking at maybe for that particular borrower to buy the practice and the real estate, or maybe they need to hold off on buying the real estate for a period of time? What do the conversations look like around that?
Yeah, a few things come into that, right? And primarily is cash flow. So if you have an opportunity to acquire real estate where, from a payment perspective, between what you're financing on the practice and what you're financing on the real estate, if that's going to be lower than what you would be paying in rent, obviously it would make more sense, and for tons of reasons beyond that, but it would make sense just from a financial standpoint there. So that is a consideration. There are times where you get smaller practice, bigger building, the seller is willing to hold on to the building and maybe charge you less rent, where from a cash flow perspective, that scenario might make sense. The other part of that bigger conversation is just the amount of financing that you're going to need, right? And
Yeah.
you may, want to go buy a practice that's $1 million that you need $1 million of financing for. And then on the real estate side, maybe that real estate is $1.5 million. There are times where even if that transaction does cash flow, financially, do you have the wherewithal to kind of support that, right? There are absolutely programs out there where we and other banks will finance 100% down. But, sometimes if you want to put the money down and that becomes a little steep, if you're putting 15, 20% into a $1.5 million piece of real estate, do you have $250,000, $300,000 to inject?
Yeah.
That becomes a factor in the decision. So a lot of things go into it, but it's almost situational, Pete, as far as the advice we would give, depending on the situation.
Right. And you talked about the different programs that you talk with your clients about. Can you just touch on the difference between whether or not conventional makes sense, or SBA makes sense? Like what does that analysis look like when you're talking with a client about both options that may be available to them, and explain the difference between the two of them?
Yeah. So, conventional financing is just, standard fixed rate, kind of what everybody I think thinks financing is when they get into this, right?
Yeah.
SBA is government-backed lending, which has such a wide scope as to what they're able to do, right? So when we talk about conventional financing, if you're looking to acquire a practice, if you're looking to grow an established practice into a much bigger facility, conventional lending looks at historical cash flow, right? SBA is a little bit more flexible in the respect that they're going to take projection income into some of these conversations. Where you see this a lot, especially these days, is on the startups, right? You have a doctor that's interested in going into a lease space and starting a hospital. 9 times out of 10, that's going to be a conventional financing scenario. However, we've talked about all the relationships out there and the information that's now available and the access to people in situations like this. And I think, we've seen veterinarians become a lot sharper about this stuff, a lot more focused on what they want to do initially based on a lot of information they've had the ability to digest. And you see a lot more veterinarians that kind of come charging out like, hey, listen, I know exactly what I want to do. this is what I want to do building size, right?
Yeah.
And have a very good, well thought out plan behind it, have the experience with it to do that. And those situations where you're getting into these bigger hospitals in a startup situation, standardized projections aren't going to cut it, and banks are going to be more reliant on the doctor's projection. That's where SBA opportunity comes in. It
Yeah.
really creates flexibility as far as the ability to get financing, but also from a term perspective, where some of the stuff that we're talking about, Pete, is 10 to 15 year standard financing, whereas SBA is going to offer out to 25, and that's going to give you an ability, to gain a lot more probably flexibility or breathing room when you're undertaking a bigger project.
So much debt, right? Yeah, I love that. Create flexibility. That's a great way to distinguish between them, depending on the project. That's what I love.
Absolutely.
And then what are you talking about, or the advice that you guys are giving when someone's coming to you? This happens quite a bit now. Bert, I'm thinking about doing a startup. I got this space, or I'm thinking, what do you think, Bert? Should I do a startup, or should I go look to buy a practice? I mean, what are those conversations that you're having with clients when they're kind of decide between the two of them?
Yeah, and it's situational dependent, right? So if they're looking at buying conceptually, they should have an idea of what that looks like. I think from a startup perspective, something that's changed immensely over the years is you have a lot more data or a lot more access to information that gives you a lot more confidence about starting up, right?
Yeah.
Whereas in the past, I think that information was limited. Now it's almost scary, the depth of information that's out there. And I think you can get aligned with people that are going to help you find a location where you feel really, really good about getting into a startup, right? So that conversation is flexible. It is dependent on what the opportunity is. It's hard to, if you have a good acquisition opportunity out there, it's hard to pass on that. You have an established business, historical cash flow, you know what you're getting into, you have a chance to interact and interview, right, with the current seller. So you kind of get a sense to a degree of what's going on in the hospital, where you can provide some value or improvement. In those situations, they're not hanging on trees out there, right? Like, they're difficult to find sometimes, but still I think is an ideal situation for you. But we've evolved so much on the startup side, and the information available, and we've seen some growth in the early years on those hospitals from a ramp up perspective that we weren't seeing 6-10 years ago. It's become a really interesting conversation where you have people that in the past would have absolutely acquired are now seriously considering a startup because of that information.
Yeah. I'm showing our age, Bert, but it's almost like that movie Field of Dreams, if you build it, they will come kind of thing.
Yeah.
And it's, to your point, with all that information and data available, you have, as maybe someone who's going to go out and do a startup, you have a much more comfort level doing it. And then you, as the lender who's lending them the money, you say, okay, that I understand, looking at that data, that makes sense. We're behind that. Let's go do it. And then you look at it a year or 2 years, and you guys were both right. The practice owner and you as the lender, saying, wow, these guys they picked a great spot. I can't even think of a client, Bert, who's opened up and struggled. I mean, I've been doing this a long time.
Yeah.
I can't think of someone who's really struggled getting going.
Yeah. Listen, man, it's this business performs at an incredibly high level, right? I mean, default rates are a fraction of 1%. So in that vein, right, like this business performs very, very well. It just is hard, right? For as long as I've been doing this, for all the opportunity that is out there, it is hard to pass on an acquisition when you know what you're getting into.
Right.
And, and it feels like a good fit. It's, I would be hard to ever advise against doing that if you feel like it's a good fit. right? The
Yeah.
ability to buy cash flow is, and historic cash flow and patient base and all of the stuff that comes with it, you know, is just one, that's an opportunity. If it's there, you jump on it.
Talk to me about the advisory team. Now, you and I, and myself, and our team and your team have worked very closely together throughout the years. How important is the right advisory team from your seat at the table? Because a lot of times I find most of the veterinarians are coming to you guys first. And I always say, he who owns all the cash makes all the rules. So as much as I could be the best lawyer in the world, if you don't have the money to do what you want to do, you can't do it. So they're coming to you guys first. And, what are you talking with them about? Because you've seen people being misadvised in what happens there. What do the conversations look like when you're talking with clients about that?
Yeah, it's especially when we're talking about a first-time owner, it's just a lot, right? It's a lot, and you've gone out and produced and gotten very good at the medicine, and very good at the production piece. However, this stuff is all new, and it's difficult a lot of times. Most times, when you're going into ownership, you're still producing where you're at as an associate, right? And the whether it's an acquisition or a startup, you have legal needs, you have space needs, you have accounting needs, you have banking needs, you have distributor needs and builder needs, and on and on and on. And made an analogy recently. It's like you're playing goalie as a veterinarian, and you have 80 pucks coming at you, and like, we're not going to get 80 pucks down to one puck, but maybe we can get it to 6 or 8, and that's going to feel a lot more comfortable. And certainly in a moment in time where you need things to go smooth, you need things to stay quiet, and you don't want your current employer necessarily finding out that you're getting ready to go start something else. Right. In those moments, right? Like, you want a team, a close-knit team of trusted advisors around you, not to just give you the best advice, but to work together to kind of insulate you as much as possible, so you don't have a lot of this outside noise, and you have people tied in that have your best interests in mind. For me, and 20 years, this is the most important part of what I do, of what we do.
Yeah. Yeah, I love working together, and I emphasize that with clients. Whoever is on your team, because I'm asking them, who are you bringing on? Because we're going to be working together on whatever we're doing now, and as whether it's a startup or as acquisition, you grow that practice. We're going to be working together, and you want your team working together. That makes a lot of sense. How is technology changing veterinary lending, or if it is at all? What are you guys seeing?
That's what we do. You should be my hype man. So, we're a fintech lender, right? We're technology based, right? So going through that entire process can be done sitting on your couch on a Tuesday night. You can go through a pre-qualification process. You get a pre-approval. We'll build you, an application portal where you just submit all of your documents, electronically. We can assign your partners, your attorney, your CPA, right? And that crew that you trust around you to help you, with some of that documentation when it applies, just to make that process as easy as possible, right? Like, at a core level, what we do is certainly not the sexiest thing in the world. There's a lot of work that goes into it, submitting paperwork and compiling and gathering records. And, I think with technology at hand today, and what we want to do from a customer experience level, trying to make that process as easy as possible is, I think, paramount to where you're trying to go, when starting a business or growing a business. So for me, it was one of, when I made the decision to come to Provide 5 years ago, one of the biggest things for me was just the customer experience aspect of it, and making it easier on the people that we work with. Because, like we've discussed throughout today, there's a lot there to manage, and the little things that we can do to make, some of those processes more efficient or easier is going to lend to less work and a better experience over the long run.
Right. You mentioned you came to Provide 5 years ago. Talk to me about that experience and when you came and where you guys are now. What are you most proud of in over that 5 year period at being at Provide?
Yeah, it's just so worked for another bank. Amazing experience for about a dozen years before coming to Provide, and managed a region for financing veterinarians at the time for those dozen years or so, and then came over here kind of tasked with building out this line of business for the company. Right, Provide at the time was focused almost exclusively on dental, just doing a little bit of veterinary business here and there. Brought me in and tasked me with building a team. Our close friend of mine and a director of credit came over with me at the time, and we sat down and we had an understanding of what this industry needed from a financing perspective, from a growth perspective, and what offerings were out there. And we kind of wanted to build something that was more veterinary friendly, right? And over these almost 6 years now, Pete, right? Like, it has been just an amazing time for me from a growth perspective to see something start at zero and grow to kind of the beast that it's become today. But the enjoyment comes from doing it the right way and listening to the doctors and understanding what the needs are and trying from a financial perspective to meet those needs when the opportunity is there, right? So it's, right. I'll be honest, and I still get a chance to do it at some level. I miss the doctor interaction.
Yeah, right? Having those conversations in the trenches, right?
Yeah, right. I miss being having a front row seat to that story where doctors how am I going to get financed, to doctors saying I just sold my hospital for $25 million. That's a very, very cool seat to have.
Yeah.
Miss that part of it, but do gain, a lot of comfort, a lot of joy out of being able to build something that has worked really well in the space and have an amazing group of people that work with me that, that are able to provide financing for veterinarians.
Yeah, and you really can, when you're talking to veterinarians at a conference or at a meeting that you're going to, I mean, you can really, you can relate to them, their stories, especially on a startup where they're building something. And you talk about where you were almost 6 years ago, with the bank, and now where you guys are now, and what you've really had a significant part of building and continuing to build.
Right.
It's a great experience.
Amazing journey, man.
Yeah. Where do you see, you look in your crystal ball, where do you see, if you do, where do you see the profession heading? What are you guys talking about when you're getting together with your colleagues?
Yeah, I mean, it continues to grow every year, right? Always in different directions. But I think there is such a different level of entrepreneurial spirit that has kind of entered the veterinary arena that I think it just, it speaks very, very loudly to what's going to come. Sitting down, having conversations with veterinarians now that don't even own a hospital yet, Pete, that are saying that I'm going to own 3 or 4, and this is what my vision is, and this is how I'm going to staff it. And,
right.
and people, again, us being older, you go back 15 years and people are like, what am I going to do? How am I going to do this? And now people are coming to you saying, this is what I'm going to do. So I think the confidence, right, and the desire to, veterinary has become more of a, I don't want to say more of a business, right? But there has become much more of a business focus inside of veterinary medicine, that it's really refreshing to see people come at it with different knowledge and different experience and want to build on something, right? So listen, man, I've been doing this long enough to know that it's going to continue to grow. I suspect, we've seen kind of an uptick in acquisition business. I suspect we'll continue to see that. We've seen this business grow to or morph to a lot of established doctor growth projects where you buy a practice or start a practice, and 3 to 5 years later, you're ready for a bigger facility. So like just the desire to own and the passion behind it, I think is just going to drive a lot more opportunity. But I think a growth space is a pretty safe bet to where this is going.
You mentioned confidence and desire, and I couldn't agree with you more. I can't tell you, doing this over 15 years now. Now, when somebody comes to you, like, you're so right. Yeah, we want to own 2, 3, 4, 5 hospitals. It's the minority who will say, I'm just going to own this one and do nothing else. The majority, multiple locations, are coming to you. And I'm thinking in the back of my mind, listen, I'll do whatever you need us to do. Why don't you get the first one up off the ground, and then you can start talking about practice number 2. But I love that confidence and a desire that's there. And then you mentioned a business focus. I couldn't agree more. Because you're right, so many more are so much more business focused, but at the same time, they haven't lost any less desire to practice good medicine and how important that culture is within that practice. Especially a lot of the younger veterinarians, you want to build something, they want to build a hospital, but also it's got to be around the right culture that kind of fits their personality and what they want to build. And a lot of the clients we talk about how important it is in terms of meeting with their teams and making sure their team's vision aligns with the owner's vision and how they get that across. And that's why a lot of them are so successful.
Yeah, and the one thing to add that I've noticed really over time, there's some very, very strong mentors out there, right? Mm-hmm. Like I feel like this business has grown because of great minds that are out there that have had experiences, not always great experiences, right? But like have gone through it, can speak very well about it, care enough to pay it forward to the young veterinarians coming into the space. Like I've had the honor and pleasure to work with some of those people, but not just people that you see out in the mainstream, some current owners that are very, very focused on, they came through a process themselves, and they want to make sure that the veterinarians that are working for them now have the same opportunities that they had. It just feels like that part of this business or that aspect of this business, it's at a level that I haven't seen before. And it's a really, really cool thing to witness.
Yeah, Bert, that's a great point, and kind of wrapping things up on the mentorship. For the two guys who've worked outside of the veterinary industry, I don't take I don't take that for granted when I see that. And you're right, there are so many successful mentors in the industry willing to help that next generation. They want to see independent practices survive and thrive, and you see that so often. And when you're talking maybe with a client, you're saying, "Oh yeah, I'm working with Dr. So and so," and of course you are. And that's great that you are, because he or she's done a great job, and they just want to make sure you're headed in the right direction.
Yep, absolutely.
Bert, where can our listeners learn more about you, learn more about Provide, content, reach out to you if they have questions, anything about, today's podcast? Where can they reach out to you and get a hold of you?
Yeah, getprovide.com is our general website. Obviously, you can reach out to me directly, Bert Hockenberry with Provide. I don't know if Pete will share the information with you.
Yes.
But would be glad to answer any questions. And then if you're interested in talking deeper, connecting you with someone in your geography that is going to be all the things that we talked about today, going to be able to make proper connections and bring you together with people that are going to help you, as you go into ownership or as you grow your current business. So would love to have a conversation and certainly, look forward to speaking to you.
Thanks, Bert. Thanks for being such a good friend, a great, industry partner. I look forward to seeing you again in person soon, and have a great summer.
Sounds great, man. Thank you, Pete. Appreciate you.
Thanks.
Bye-bye.